Hey everyone, and welcome. With Thanksgiving right around the corner, we know things are about to get, well, a little crazy. So before the whirlwind of family, food, and football completely takes over, we wanted to put together this quick guide for you. Think of it as a checklist of a few key money moves that can really help you end the year on a financial high note. So let's jump right in.
We absolutely love this way of putting it. It just sets the perfect tone, right? We're not talking about some scary, super complicated tax stuff here. Nope, these are just the simple, final checks, like making sure you have enough chairs or that the turkey is thawed, to make sure everything's in place for a really successful year-end. It's all about smart planning, not stress. So here's what we've got on the menu today. We're going to walk through how to turn losses into some serious savings, how to boost your business deductions. Then we've got a really important alert from the IRS about crypto you need to hear. After that, we'll talk about maximizing your charitable giving and wrap up with a super timely tip on getting ahead of deadlines. Let's get to it.
First up, let's talk about something that sounds kind of negative, but is actually a huge opportunity. I'm talking about your investment losses. Yeah, you heard me right. With a cool strategy called tax loss harvesting, those market downturns can actually become one of your best friends come tax time.
So how's this work? It's actually pretty simple. You intentionally sell investments, could be stocks, could be crypto, that are down, that are in the red. By doing that, you lock in a capital loss, and you can use that loss to cancel out investment gains you might have somewhere else. Now, the key, and this is a big one, is the deadline. You have to make the sale before December 31st for it to count for this year. The end goal? Well, it's pretty sweet, a smaller tax bill.
And look, this isn't just theory. This is real-world stuff. We had one client who harvested about $14,000 in losses, and the direct result of that one move, they saved $3,548 on their taxes. It's just a perfect illustration of how being proactive in December can make a huge, tangible difference in April.
Okay, let's build on that, especially for all you business owners out there. If you've been kicking around the idea of buying some new equipment, listen up, because right now might be the absolute perfect time to pull the trigger. And it's all thanks to something called bonus depreciation.
So here's the deal. For qualifying new equipment, you might be able to deduct the entire cost. I'm talking 100% of it this year. The fine print here, the part you can't forget, is that the equipment has to be placed in service. That just means it's set up and ready to be used in your business before the calendar flips to the new year.
Just look at this real-life example. We have a contractor client who went out and bought a $38,000 trailer on December 22nd. Because he put it to work right away, he got to deduct the full $38 grand. That is a massive deduction that took a huge bite out of his taxable income, all because he timed his purchase just right. Okay, we need to switch gears to something that's both timely and frankly pretty urgent. The IRS has been firing on all cylinders when it comes to cryptocurrency. So if you've done any crypto trading at all, you really need to pay close attention to this next part.
Let me just ask you this directly. Have you or has anyone you know gotten a letter from the IRS about crypto in the last few weeks? Because they are sending out thousands and thousands of these notices right as we speak.
If one of those letters lands in your mailbox, here is the single most important piece of advice I can possibly give you. Whatever you do, do not ignore it. I don't care if the numbers look tiny or if you're sure it's a mistake. These letters demand a response.
And if you're thinking, oh, this is just for the big-time traders, think again. We've seen brand new clients just this week get official IRS CP 2000 notices for trades as small as $1,300. Now, the good news is these things are almost always fixable, but the key is you have to deal with them, and you have to deal with them right away.
All right, let's move on to something a little more positive, a real feel-good topic, charitable giving. A lot of us plan to make donations at the end of the year, which is fantastic. But when it comes to your taxes, timing is literally everything.
The rule here couldn't be more simple or more absolute. For a donation to be deductible on this year's tax return, you have to make it by December 31st. Period. If you wait and donate on January 1st, that's great. But that deduction now slides over to next year's tax return. It is a hard cutoff.
And that timing can make a real bottom-line difference. Just last year, we had a couple who donated $5,000 to their church on December 29th. Because they got it in just under the wire, they were able to slash their final tax bill by $1,100. It's a perfect case of doing good and being smart with your finances at the same time. Okay, our last tip is for anyone out there who might, have some past due tax returns that need filing. I know the gut instinct is to just wait for the new year to deal with it, but we're here to tell you that acting right now is a way smarter move. This timeline really says it all. Right now, believe it or not, is the calm before the storm. But as soon as January hits, the floodgates open. The IRS officially reopens for the new tax season and is immediately slammed with a massive backlog. Delays are just a fact of life then. But if we get everything prepared now, your returns are ready to launch the second e-filing opens, putting you at the very front of the line instead of the very back.
So, wow, we've covered 5 really powerful strategies you can use before the year is out. The big question is, what's next for you? How do you take these ideas and actually apply them to your own situation before things get too hectic in December?
Well, the team here at Black Ink has made this as easy as possible. Step 1 is just to take a second and think about your own finances this year. Then, for step 2, just pull up the email where you found this guide and reply with one single word: Thanksgiving. That's it. That's your signal to us that you'd like a year-end review, and we will take it from there. Thanks so much for tuning in, and from all of us here, we want to wish you a very happy and very safe Thanksgiving.